Well, a recent Heitman report's got some just outstanding news in regards to the self-storage asset class. Heitman, by the way, $48 billion in assets under management. We're going to talk about that and much more today here on the Self-Storage Report. I'm your host, Chris Berg, head of business development with Abernathy Development. Along joining me today, the one and only Thaddeus Campbell, co-host here with S3 Partners. Thaddeus, great to see you. Before we let you jump in here, I just want to say happy early Thanksgiving to everybody. It's America's Day of Family, Food, and Football, so I hope you get to enjoy all three. All right, Thaddeus, let's jump in here. Do you want to start with the Heitman report or what you recently did?
I'm at a loss for what I recently did, so I'm gonna like that wasn't in the rundown as I
No,
prepared for
this
the
is
show.
a
So
surprise.
now you
But
got me teased. By the way, I want to just add that while I didn't really like being called Rad Thad every week, now that you're not introducing me that way, I'm sort of missing it. I'm gonna be honest. It's sort of it's one of those things. Anyway, be
thank
careful
you.
what you wish for in life.
Thank you, Rad Thad. And you are a Rad Thad because what I want to acknowledge you for is earlier this week, and you just talked about it before we jumped on the show. You said that you lost 40 pounds. I just think that is amazing, man. So I wanted to take a moment to say congratulations, just let you talk about the journey.
Yeah, listen, my weight has always been a struggle, and it's been something that I've had to really focus on when the time came to really realize I don't know if I haven't shared this on the show. I lost a really good friend of mine, someone that was a constant partner in my early martial arts journey at 48 years old, died of a sudden heart attack a month and a half ago. So it just was an eye opener, and I got back on this train really hard, and I still got a long ways to go, and it's going to be a constant fight, but it's been nice to obviously when you lose 40 pounds, life feels a whole lot better. So it's been cool. I'm wearing this shirt. I told you this before
That's
we got on.
good.
I've not been able to button this shirt up in a year. So it's kind of a cool feeling to be able to fit back into the shirt. So I'm rocking this shirt for TSSR just because I fit into it again.
You look great, man. Give us one of these, bro. Let's see what you got for the go.
There's none of that, dude. We're not there yet. Give me a few more months. No flex yet. No flex.
No, kudos, man. I just think it's fantastic. It's great to hear. And you look great. I'm assuming you feel much better. And so it's going to be, good as you head into Thanksgiving and continue to keep moving forward. So, all
In
right,
the
let's talk about.
spirit of Thanksgiving, Chris, I just want to piggyback off of that. This is something I told you months ago. You keep yourself in such amazing shape and the way you present yourself. And it was as we started this journey on the self-storage report, putting myself in your life and being as close as we've become, it's been an awesome motivator for me. So just know this Thanksgiving that I'm extremely grateful that you are in my life and playing that role as somebody that I can look to follow down that road. I appreciate it greatly.
Thank you very much, man. I mean, the feeling is mutual. And I will say, so everyone knows, there was times when Dad was like, man, dude, I'm losing weight. I can't continue to, be on camera. I sit next to you or whatever you'd say, kind of in a nice way, busting my chops. But so anyways, man, I appreciate that. Same to you. It's been great. There's many, many more times and years to come. And let's jump into this Heitman report because you've alluded to this in the past, but then when you see a company like Heitman and they've got $48 billion in assets under management. Now, to be fair to this report, $10.5 billion of that is also within self-storage. And the report is saying that, hey, self-storage as an asset class has outperformed multifamily, industrial, office, retail over the last 15 years. I think if you look at any great investor, they're taking a very long-term approach. I mean, our JV partner, billionaire hotel developer, and he always says as we're going out there looking for assets, he's like, guys, these are 50-year assets. Like, don't look at it from quarter to quarter. And I think in America, it's so easy to do that because of obviously with how we've got, quarterly earnings calls and this very sort of 90-day short-term approach, day traders, if you will. And, when you have somebody actually that's been there, done that, and had a tremendous amount of success and go, hey, these are 50-year assets. It's just not a time frame that many people think in. So one, I think it's great news for self-storage to see Heitman come out with that kind of data. Secondly, I think it explains why, which we're going to get into later today, we've seen so much supply come online because I think many people, as we talked about last week in the development roundtable, were like, and it wasn't really your mentor, but a person you work with was like, hey, dude, just take a dart, throw it at a piece of dirt, you're going to make money.
To the point, and I think it's something where it's important sometimes that we step back. Obviously, we do a news show every week, and a lot of times we get a little bit, we kind of concentrate on some things that aren't going so great in the industry. Listen, relative to what's going on in the rest of the world, our problems are good problems to have to struggle with. And to that other point, I'm looking out my window at a construction site across the street. Interestingly, a hotelier that I'm friends with that got into the self-storage business. Look, when you're investing in an asset for a long term, you want to beat inflation, right? A 5 or a 6 or a 7 yield on cost beats inflation. And you can do that in self-storage very, very strongly. Of course, is that going to continue if we keep seeing the type of supply that we've been seeing? Obviously, we'll discuss that as we go through the show today, because I know you already came out with their annual tracking of what's going on the supply side of things. But still, as far as real estate asset classes go, self-storage is as good as it gets.
Thank you for saying that. I completely agree, and yet still, we want to deter people from just jumping in and saying, like what you were told, go find a piece of dirt, throw storage at it, and you're going to make money, because it's not the case. And so we want to protect people that are either new to development. Find a great GP, if you will, and be an LP for a while. Get to understand the business and how to underwrite and what goes into building a really strong self-storage asset before you spend a bunch of money, put up, steel, and find, oh my gosh, this thing's not cash flowing the way I thought it was going to. So I do want to get into this Yardi Matrix Supply Report. I think it was very, very telling. Before we do, if you'll bring up the graphic that I sent over to our great producer, Eric, please, and just bring that up. And you and I, Thaddeus, again, one of the things I really enjoy about this show with you is we don't talk a lot about what's going to take place. A lot of this stuff is organic. And so I posed this question on LinkedIn yesterday. I said, hey, what really jumps out to you in this graph? And if you would, and I don't know how, if you trade stocks or not, but if you kind of put on maybe a stock trader hat and go, okay, if I'm looking at a stock, like what really jumps out to me in this chart? What would you say?
Well, I think the first thing that scares me a little bit is the gray line is trending upwards again, which is a little frightening to me. I would like to think that we could, well, I know that we could use another year, year and a half, 2 years of limited new supply coming on. So while the trailing 4 quarter average is exciting to me because we need this in the industry, the current quarter trend is not making me feel overly excited.
I would agree with you on that piece, except for if you look at like Q1 2024, huge spike up and huge spike down. So I'm not so concerned about the quarter to quarter piece as much as what gets me excited, especially again as a developer, when I look at this trailing 4 quarter average. And if you look at where it's at here in Q2 2025, it's almost creating a new all-time low in comparison to, Q1 2018. Like maybe Q2 2018 is the same, but you're seeing a new low in oncoming supply over a 4 quarter average, which I think, as you and I have just talked about, is really, really good news for people in the development space. We talked about this yesterday with the president of our development firm, who just says, hey, look, a lot of people right now are pencils down. We aren't. And I think that's going to bode well for us, long term. Again, as we talk about and look at these assets from a 50-year perspective. Now, are we buy and hold for 50 years? No, we're not. Still, though, you and I both understand. And again, simple good, complex bad. That's definitely how my brain works. Simple says, hey, supply and demand is sort of the key equation in this situation. So if you can find good places with low supply and low incoming supply, at least you're giving yourself a chance to mitigate risk and have some success.
I think it's important to understand that while we may not build it and hold it, because our model is very similar to you folks with S3 development, S3 partners, somebody's going to own it for 50 years. And in order to have an outlet to make money as a developer, you have to have a person who's going to buy that asset that can listen. They don't want to lose money when they buy it. They have to have an ability to make money through the life cycle of the property as well. So yes, we may not own it for 50 years. And if you do buy it and you put cash that you have on hand into it, it's easier to own for that long term. You still have to be developing with that mindset of somebody's got to see buying this asset from me as a profitable purchase for them as well.
I want to piggyback on that in a moment, but first, just to go back to the graph, like, do you concur with my assessment here in regards to, hey, man, what's exciting is that 4 quarter piece. If we're not trending into a new all time low for over 4 quarter trend, I think that bodes well, and that's good news. Do you agree?
Yeah, I mean, definitely. And even with the uptick that you see in 2025 Q2, you're still well below a lot of what's happened. You see Q1 2022, a lot of that was still things that weren't coming out of the ground from COVID issues. You got to go back a ways until we see a typical starts lower than that. So definitely agree with you that this is a positive trend and something that, makes me feel a little more comfortable.
One of the, keep that up, please, if you don't mind. One of the things that just hit me that I think is really important for us to discuss, especially again from a development investment standpoint. when did COVID start? You remember?
Yeah,
March of
March of 2020, right?
you
So
March of
you can
2020, COVID starts. Then it was, I think, 21, 22 is when the storage REITs, NOI growth and stocks just like went through the roof, correct?
yeah, and go
Go
ahead.
ahead.
Now, I was just gonna say, actually, now that we go through the timeline quarter by quarter, it actually makes it surprising that Q1 2022 is so low.
Well, it doesn't, because I think what happens is that people, and this is what I want to get at for developers out there that think, hey, I can just go look at a piece of dirt. People see the stock and go up, and what happens to humans? Humans have FOMO. We start to chase. And so what happens now, guys are going, well, man, look at the public storage stocks. They're skyrocketing. If those guys can do it, I can do it. And they didn't really start to deploy or start these constructions. So maybe they deployed the capital, let's say 22. The construction starts don't really start though until Q1 of 2023. You and I both know it doesn't get out of the ground until like 24. And so I really want to just stress to people, it's like when you're behind the curve, get out of the way. Don't try and do the FOMO and catch up, because you're going to get bit. Like a lot of guys are getting bit right now in 22. So you want to sort of anticipate. Again, this is why I think this 4-quarter trending downward thing, and again, don't develop. I will strongly tell you, don't develop. But I think it's a positive sign if you are in the industry from that perspective, because I think some people got bit and are like, wait a second, I can't chase. I need to be ahead of the curve, which is what we're consistently talking about on our team. Is look, we know it's tough right now. We know there's challenges, but it's doing the reps. You and I talked about this earlier this week, doing the 3-step, the 5-step, the 7-step drop. So when it is time to deploy, you're ready. You can deploy that capital, get a good asset, and hopefully, again, have some success. Take away.
100% agree, and just be careful about hopping into something where the bandwagon has grown so big. That's it. And doesn't listen, I can't dissuade somebody from getting into storage. There's still people coming on board. All I can say is try and get somebody that you're partnered with that really has a track record. I mean, we talked about Lauren and Lauren Feeney and Cam Pactonat last week, Trojan and DXT, proprietary AI that they're using to really vet these sites. I mean, you're the level that people are at as far as sophistication is extremely high.
With that being said, I think it's important, if you are going to get into the world of either acquisitions or development, it's really important to have great data. And that's exactly why we've teamed up with Tract IQ, so that you can go in there and look at different areas of the country, different sites, get the appropriate data. So again, you can make at least the best informed decision possible. Don't just throw a dart at dirt and hope it's going to pay off. Get informed, get great data, and then make a very, well-informed decision in regards to what you're seeing. So check them out. It's tractiq.com/TSSR. Tell them, hey, I heard about you guys on the self-storage report. They'll take great care of you. If nothing else, it's a free consultation to at least see how they are viewing assets and how they're beginning to underwrite things to, again, help inform you to make good decisions with your capital.
One of the things I love about Tract IQ, Chris, and why we approach them to be our partner here, very easy to get the construction data that's going on for residential construction, for other assets of commercial construction, as well as what's going on in a trade area as far as self-storage construction. So their data is second to none. We always say the same thing. Tract IQ is incredible, but it is a data source. You still have to go out and get boots on the ground and do the work following it. But no better place to start your search for data and demographic information than with our partners at Tract IQ.
All right, I know you've got a couple clips you want to share with us. The floor is yours, my friend.
Yeah, I had a really good chance to catch up with Ben Vestal of Argus. Of course, they sold their management, their third-party management platform to SmartStop. We covered that pretty strongly over the last few weeks, but finally had a chance to catch up with Ben Vestal and pick his brain. And I asked him, I said, hey, why now? What made this the time to go forward with this sale? Here's what he had to say.
I did the deal with SmartStop simply because I thought it was the right time for my clients and my people to really take it to the next level. I do think that there's a tremendous opportunity for self-storage, third-party management companies to create value for owners, but not just the REIT type of properties, the secondary and tertiary properties, the smaller properties.
To expound on what Ben had to say, he mentioned technology, and technology he feels hasn't done what people originally thought it was going to do in self-storage yet. But we've come to this inflection point, and Ben made a point. I played a clip last week from Ronna Siegel from StoreQuest, from the William Warren Group, very much aligned in their thinking there that we're coming to this differentiation point. And certainly Argus was more than capable of great third-party management, but by combining forces with SmartStop, combining the technology capabilities that SmartStop has, as well as the management side that Argus has, you're at this point where you're going to have to get to that place to really compete and separate yourself from the market in the third party management platform. Really insightful conversation with Ben. Another thing that I wanted to talk about that he was very clear about is that trend. And again, piggybacking on what we talked about with Rana Siegel last week, people are not just going to the REITs now, even in primary and secondary markets. Argus is starting to see smaller portfolios, 3 to 5 to 10 stores in major markets that are coming to these smaller I say smaller than Extra Space and their 2,000 stores. These really established and strong third-party management companies that are really performing well in major markets, even when there's a REIT presence there. So thank you very much to Ben Vestal. You'll be able to catch my full episode with him. I had him on the Stories Behind the Door podcast. That'll go live next Wednesday on the YouTube channel as well. But amazing guy, really grateful that he took the time to come by. Obviously, as you can imagine, he's still involved. He became a part of the SmartStop group. So Argus was absorbed into it. He didn't sell it and leave. So he's pretty busy these days, on top of being one of the leading brokers in the space and leading Argus Self-Storage Advisors, also still very heavily involved in the third-party management side of it.
Yeah, with that being said, as you talked about, hey, there's more and more people that may not be leaning into the REIT 3 p.m., other 3 p.m.s. We're just very excited. Next week, we've got Brett Henry. He now owns Quick Store. They're going to be our, major partner with this show, and we're excited to give you an opportunity to find out what Brett's been up to, what he's doing. He's had such tremendous success. He's the head of Trojan Storage, but just tremendous success in the industry, great at buying assets. Again, having that long-term point of view, and he's ended up buying Quick Store and doing some really exciting things with some capital investments there to ideally help operators, grow their NOI, which is, as we know, the name of the game. So that'll be next week. Be sure and join us next Thursday to hear from, I think, one of the best in the business, Brett Henry.
Built a portfolio that with his partner at Cobra Co, sold it in the mid-teens, did extremely well, started out again. Trojan is universally respected in the industry, and really bought Quick Store because he was not loving the trend that he was seeing in property software management, where everything was getting combined into a couple of private equity groups owning all of the software management system. And so he's setting out to help Quick Store be something that a private owner can really trust and meets the needs of a private owner. So really excited to partner with him. We want to help him grow that Quick Store brand. I really believe in what he's doing there. Certainly doesn't hurt that his depth of knowledge in the self-storage industry is second to none. And we look forward to sharing a lot of that knowledge with the people that follow and really rely on our show to get great information.
Yeah. What do you always say? This is the only show you need to know or listen to make a smart storage
All
investment.
the news you need to know to make smart self-storage. I used to say all the news you need to know in under 30 minutes to make smart self-storage investments. We've cut out the under 30 minutes because Chris and I are a little verbose. We like to talk a little bit. So sometimes we challenge that 30-minute rule.
I don't know what verbose means, but sounds good.
I don't either, but I hope it's somebody look it up for me and tell us in the live comments if that's the right word. I think it means we talk too much, but that's all right.
All right. What's the other clip you have for us?
I got a couple other things. I want to talk about our risk partner, Terry Johnson, or Terry Campbell at Johnson Insurance. You'd almost think I'd remember his last name, given what his last name is, but had a really good conversation. Terry is, again, universally respected in the self-storage industry. 31 years he's been in this industry. Started at Betco doing CAD drawings when CAD first became a thing. Went on to start Live Oak's lending platform. Live Oak is now the largest lender in the self-storage industry, and Terry started that vertical for them. He joined Johnson Insurance, which is a hometown insurance company near where he lives in North Carolina. And I talk to him frequently because he's going over portfolios and assets, and he's underwriting things for folks. And in getting a chance to go and see these assets up close, he's seeing things that are scary from a risk perspective, right? Things that an owner may not understand because they just haven't been exposed to it on the risk side, right? If you haven't had a calamitous act at your facility, you may not realize that this is opening you up for some significant costs. So one of the recent things that Terry underwrote was a boat and RV facility. I'm going to share this clip from Terry Campbell of Johnson Insurance.
Hi, it's Terry Campbell with Johnson Insurance. You know, there's a lot of talk these days about the boat and RV storage industry. Great industry, a lot of growth going on. Something to consider if you're an owner of one of these facilities. Make sure that the folks who are storing their boat or RV have full coverage on their unit while they're stored with you. Also, make sure that they have you added as an additional insured. That way you know the coverage is always in place. You'll get notification if that policy is ever stopped. For more information on insurance, more tips, give me a call. Look forward to talking to you. Thanks. Bye-bye.
You can go check out Terry and the team at Johnson Insurance and get a free underwriting of your insurance coverage, right? They're going to go in and do a complete risk assessment for you. Really important for you guys who are owners who haven't had this done for a while. Can't more strongly suggest you have them do that for you. And here's why. Why did Terry play that clip for us? Well, because they were underwriting a boat and RV facility for someone that hadn't had it done yet and came across the fact that they didn't know whether or not the people storing their boats and RVs at the facility had insurance or not. So by asking your renters to make you co-insured, right, you get updated as the owner of the facility as to their policy, and you make sure that you don't open yourself up for that extra level of headache that comes if there's some type of event at your facility and their boat or RV gets damaged. You don't have to worry about whether or not they're covered or not.
Not only you mitigate risk, I think it's really important to understand, like, the one thing that's eating into people, not the one, but one of the major things eating into NOI today is insurance. So again, if you can sit with someone like Terry, he can help you lower that premium. Now all of a sudden you're raising your NOI, you put that into a cap rate, and now your asset's worth, X amount more dollars. So mitigate risk and potentially even add more value to your asset becomes kind of a no-brainer. Check them out. GoJohnsonInsurance.com. What else you got for us, my friend?
I want to talk a little bit about it. I've been lucky enough over the last couple of weeks to talk to a couple folks that are at the forefront of what's going on in the transaction market, right? So I had Tim Ryan on the Stories Behind the Door podcast. He's currently airing. He's on the YouTube channel. And then Kevin Bledsoe, I met with a very big bro. Tim Ryan, by the way, Newmark, works out of New York City. He's the senior vice president with them. He appraises properties typically for the banks. The banks will come to Newmark and say, hey, can you go give us an appraisal of this to make sure that what our purchaser wants to buy it for makes sense? Just for context, Tim has appraised 200 self-storage facilities in 2025. Newmark as a team has appraised over 1,000. So they just have unparalleled data as to what's going on in the self-storage market across the country. Here's Tim Ryan from Newmark.
How things are getting easier as we're actually seeing an active market. The bid-ask spread has really come down. The rate cuts have certainly helped guide people toward maybe this is the time to sell. I'm seeing facilities in lease up that are selling. I'm seeing stabilized facilities that are selling. The C of O sales aren't quite there yet that I've seen, but certainly we're seeing a more active market.
Tim Ryan from Newmark, and one of the things he mentioned is they've been busy over the last couple of years, but it's been far more refinances, things like the Extra Space Lending Program, not straight purchases. This year, a lot more of the appraisals that he's doing are actually for transactions where somebody's selling that property to somebody else. Kevin Bledsoe out of Maryland, grew up in the York, Pennsylvania area, very established broker, especially in the mid-Atlantic region of the country. Piggybacking off of what Tim said.
We're expecting 2026 to be a much better year. We're going to get potentially another drop, another 25-point drop at the end of this year in December. I think we're going to get another 25-point drop early next year. It's what we're anticipating, at least. So interest rates have come down tremendously. We're seeing a lot more movement.
Two things I want to talk about from the conversation with Kevin. Yes, they're seeing a lot more movement. When he says what we're seeing, he's a part of the Marcus and Millichap network. So he's not just saying that because of what he's seeing personally. He's talking about the data that Marcus and Millichap is collecting, and they as an organization expect, and of course we all sort of expect a 25 bip drop in December. But all of their information, and again, massive amount of data points that they collect over the years, are leading them to believe that this trend is going to continue. One thing Kevin did mention that I think is interesting is like, hey, look, the reality is at 6.5%, 7%, interest rates are not at historical highs. Quite the opposite. He's like, we could go back to 1981 when people were paying in the 20s. So, be careful what you wish for on the other side of this whole thing. Some good things happening and some reasons to believe maybe we see some uptick in housing movement. Maybe we see some uptick in the transaction volume and self-storage.
Well, I think that's one of the things I didn't talk about in the supply piece. I want to get into this Kelce Fed decision in a moment, but also if you look at, over the past 3 years, you've seen actually negative net NOI growth because of all the supply coming on. Like that's just starting to shift now in a more upward positive direction. And we haven't even seen the housing market start to really move and shift at all. So demand picks up and the supply going that, the direction it currently is over the past 4 quarters. I think, again, that bodes well for this asset class. To speak to the Fed decision in December, it's been a little hairy. Like there were some moments you can see here, and I don't know if you're into Kelce, man, but I love Paulie Mark and Kelce. I think it's fascinating. But just November 20th, it was down to a 27% chance of a 25 bit cut. Then some word came out from Trump. Scott Bessent was on CNBC yesterday. Now we're back up to 82. It was at a high in late October of 89. So probably very likely we're going to see that 25 bip cut in December, just what's happened within the economy, obviously the labor market. But the one piece that I'm not hearing enough people talk about that I think is really important to start to anticipate, there's going to be a new Fed chair in May, right? That's going to be probably announced either right before Christmas, according to Scott Bessent, our Secretary of Treasury, or right after Christmas, Trump's going to make that announcement. That is going to be a shadow Fed chair. There's no doubt about it. They're going to start squeezing Powell. I think the market's going to anticipate this new Fed chair coming in. Wouldn't be a bit surprised if you see some dramatic drops in the rates because Trump needs to save the economy going into the midterms. Did you watch the presser with him and the mayor of New York by chance?
I did not watch that.
All I got to say is, Trump sees what's going on, right? Like Trump does not just put anybody in the Oval Office. I was very fortunate when I was back in North Dakota. I had a chance to interview President Trump at the White House. He really respects the Oval Office. So for him to pull in, I can't remember his name.
Zoran Mamdani. That I do remember. I didn't see the clip, but
so for him to pull him into the Oval Office and stand the way he did, and Trump sitting down, I mean, it's very clear Trump sees like, hey, look, I've got to make some interesting bedfellows here over the next 12 months because he knows if he loses the House in 2026, it's just going to be impeachment hearings galore. It's going to take all the oxygen out of the room. He might as well just go golfing in 27 and 28, right? So he's trying to maneuver the chessboard as best he can, thus bringing us back to the Fed. I think you're going to see some really interesting things take place even before May, but I think it's important, being an investor that you start to anticipate, hey, I know this is going to happen in May. I know the mentality that this new Fed chair is going to have. How do I anticipate what's going to happen post-May so I can place my capital accordingly?
100% agree with you. It's about understanding the trends and listen, sometimes you get burned, but if you really pay attention and you study over time, you're not going to get burned more often than you see the thing coming. And, if what you and I both think is going to happen, that Trump appoints someone with the understanding that they're going to continue to cut rates in the short term, that's going to open up some opportunities through the second half, first and, middle of the second half of 2026.
And there's so much to talk about. Like when you see what Bessent is doing at the Treasury, I don't want to get into all the weeds, but just like Thad said, if you're into studying this stuff like I am, please do yourself a favor and do that. I think you're going to be able to make some very probably smart and interesting decisions over the next 12 to 18 months. So,
or you could just watch our show for a half hour every week and get all the information you need.
There you go. This is not investment advice, but if you want it, call me. We'll chat, right? We'll talk about where to put some capital. So
notice I said that with a big smile because one thing Chris and I talk about all the time is, look, we do a lot of research. We do a lot of work to put this show on. We talk to a whole lot of people, but trust but verify, right? Do not rely on us to be the be all and end all of the information that you're getting. Really important that you go out and do your own homework. And yeah, maybe we lead you down a path, and I'm grateful if that's the case. Subscribe to our channel. We certainly appreciate that. Support us in the show. It means a ton to us. But listen, we're going to do our best to educate ourselves to make sure that what we're presenting is the best information. On the flip side, always do your own homework.
Yeah, very well said. Again, this is not investment advice. We probably should have like a little disclaimer just pop up at the bottom of the screen. This is not investment advice, but just so that's clear. And again, educate yourself. And thank you so much for joining us here on this pre-Thanksgiving show. Again, happy Thanksgiving to you and your family. Family, food, and of course, football tomorrow. So enjoy. I'm
Wait,
Chris
who's the
Berg.
best team? Who's the leading team in the NFL right now? Who's got the
I think
best
it's the
record?
Denver Broncos.
It is not the Denver Broncos. The Denver Broncos are 9-2. My New England Patriots back again after they were left for dead, leading the NFL in record. Just want to put that for the record.
That because you guys are stealing signals again, or?
Yes, we have a little. We have a guy on the sideline with a camera. Hey, if you're not cheating, you're not trying. Let's go. We'll deflate footballs. We'll
All
do
right,
everything.
yeah. Have a great Thanksgiving. This is Chris Berg, Thaddeus Campbell, the Self Storage Report. God bless.